With over $170 million in liquidations, Bitcoin has experienced one of the most volatile days in recent weeks. In today's video, we're here to discuss the short-term price action, the next move for Bitcoin, and how the macro charts are shaping up. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on a smaller time frame, discussing two particular things. Number one, the smaller time frame price action. What is it looking like from a technical and structural perspective, and what could the next moves be? And number two, the higher time frame price action, and how is that shaping up? Before we do get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, the relevant economic and news events. No hype, no BS, no emotion, pure raw TA. If that's the kind of content you were interested in, go ahead and join us on Telegram as well. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, information, and everything you need to stay up to date with not only the economy and cryptocurrency as a whole, but Bitcoin and all of the charts. If you're interested in joining our VIP channel, we post exclusive trades with exact entries, such as this one over here, LTC. Exact entries, exact targets, exact stop losses. We have a group chat with hundreds of members in here discussing charting, discussing trading, learning how to trade. We post our ideas. People take trades in here. We share our ideas. There is so much beneficial content in here, guys. A whole community full of awesome members to join. If you're interested in joining our main VIP channel and our many group chats, you can see we have a couple over here. Go ahead and contact me. The pinned comment in the free channel right over here, you'll find out more information. Let's get into the video, guys, starting off with the market data. So how are we looking for today? 24-hour volatility and volume. Starting off, volume is up 66%, so pretty large, sitting around 120 billion. 24-hour liquidations have skyrocketed to 170 million, up 89%. $170 million in liquidations, absolutely brutal. As for July, we are currently down 1.35%. We're about 7 days in, so about a quarter of the way through. We're not looking too amazing, but it does have a long way to go before the monthly close. We'll keep an eye on that. Looking at our overall volatility index, on that 30-day period, we can see the volatility index is still moving toward the downside, and we're finally starting to see the price catch up. In fact, yesterday we were telling you guys the discrepancy between our volatility and our price action, when rising price, falling volatility, was a bearish sign. It was signifying a move toward the downside is likely. We've seen that play out. Moving on to liquidations, over the 170 million in liquidations, we have seen a majority of those come from those long positions with an initial short squeeze to start off with. Let's go ahead and jump into the DXY. So the DXY is still compressing between our downward trending diagonal resistance being this dotted trend line. We can see 4 points of contention, and our horizontal support sitting around 102 to 102.4. We are coming up to our apex point. The direction of which this does break will determine the direction it will continue. So we're looking for a break on the daily candle close above the dotted trend line to validate the move upwards into our next liquidity zone or resistance block, and or if we do drop below our horizontal support, we do need to push lower into this range. Now, of course, if we do push upwards on the DXY, that is generally bearish for stocks, generally bearish for cryptocurrency. We do push downwards for the DXY, that is generally bullish for stocks and generally bullish for cryptocurrency. We do have a variety of economic data coming out over the next few days. The big ones coming out today are, of course, NFP and unemployment rate. That is going to be in a little bit less than 10 hours time, so keep your eyes on that. As you can see, NFP and employment rate are coming out today. We do have inflation data coming out on the 12th, which is 5 days from now. And then on the 13th, 6 days from now, we have PPI. All of these pieces of information, all these relevant data events can influence the DXY and, of course, the overall direction of the risk asset market. Looking at the S&P 500, we can see we did get that rejection from yesterday up over at 4,500. We did say in yesterday's video, we do expect the price to move downwards from here. We have now seen that start out, which is looking pretty good. Once more, we are in a rising channel formation. If we do break below our uptrending support level, we can expect a correction to occur on a higher time frame. Until then, we are technically range bound in a uptrend, and therefore you have to expect a little bit of ranging, a little bit of a chop on this upward trajectory. If we do lose this uptrending support, that is when the overall higher time frame direction shifts downwards, shifts bearish. Moving on, the Dow Jones, a similar pattern, a similar thing going on over here, but not to the same extent as the S&P. You can see that relevant uptrending dotted support over here, which is in retrospect the same dotted trend line or solid trend line we have here on the S&P 500. You can see just by the extent of these two how much the S&P 500 has actually moved in comparison to the Dow Jones. But the same levels do hold relevance, meaning a loss of the weekly chart under this uptrending dotted trend line will confirm a breakdown and possible directional shift in trend. We have our uptrend over here. Okay, we have slightly higher lows. We are seeing some weakness. We are seeing some drop in volatility and volume. This could signify a correction is incoming, particularly if the uptrend is lost. So watching that trend line. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So we'll discuss what we talked about yesterday really quickly, and then we'll jump into our new analysis. So in yesterday's video, we told you guys we were seeing a downtrend develop according to this downtrending trend line. If you paid attention to yesterday's video, you would have known we said if we broke above this downtrending resistance line, we were expecting a continuation upwards to 30,800 to 31,000. We also said that this level, 30,800 to 31,000, is a bullish trigger while the price is underneath it. We saw a break above the bullish trigger, and we saw a continuation into our upper resistance zone of 31,000 to 32,000. So we're going to go over that again. Currently as standing, while we are underneath our 30,800 to $31,000 level, this acts as a bullish trigger. Okay, meaning if we break above it, we expect a strong move into our next resistance between 31.3 and 32. We saw that once, we saw that twice, we saw it 3 times, and yesterday we saw it for a 4th time. On the downside, we have our bearish trigger. This, of course, is going to be the support level between 29.8 and 30,000. A loss of this level will result in a directional move toward the downside, most likely filling the gap between this $29,000 point and 29.8k level, initially finding some degree of support within this range. We'll come back and discuss it. So what we're looking at the chart over here, guys, is very much still the same thing as yesterday. Although we have seen a whole heap of volatility toward the upside and toward the downside, we haven't really changed in terms of our structural levels, or we haven't really confirmed any break upward or break downwards. This, of course, was a liquidity grab. This, of course, is now a retest of support. So we technically speaking, we are still within this horizontal consolidation above our 29.8 to $30,000 level. And therefore, everything we discussed yesterday and everything about the chart is actually still the same. It is relatively the same. Now, there is one thing that has changed, and that is going to be our relative uptrending diagonal trend line. We have officially broken underneath our relative uptrending diagonal trend line. We can go ahead and plug that one in over here. You can see our uptrend represented by this black horizontal diagonal line. We can go ahead and copy that one across and we can paste it up over here. So we did have this rising channel formation crossed over through our horizontal channel. Now, if we go to our Telegram channel over here, we can see we talked about this actually in Telegram. We posted this one in that VIP chat. We said this is a huge resistance up over here. We're expecting a rejection from here. In fact, we saw a very strong rejection, so massive profits for our members at that point. So we did see that retest of that trend line. We saw a strong pullback. We are now sitting underneath it. So we are underneath our structural level and according to our rising channel, but we are sitting above our horizontal base of support between 29.8 and 30K. Now, if we're going to look at these two levels and say which one takes priority, well, this level here is going to take priority because it represents liquidity, okay? So our diagonal trend line, although is relative that we're broken under, is not going to represent a important level. It is going to represent a shift in direction and strength, but our key level in terms of the next move downward is going to be reflected by 29.8 to 30,000. But we're going to stay on this point for a little longer because although, like I said, it's not entirely relevant, there is some relevance to this trend line. At the moment, since Bitcoin is sitting underneath this level, we have a slight downward bias, meaning we should be looking for a correction and break below this level while Bitcoin remains underneath this trend line. But that doesn't mean Bitcoin is going to do that, as we do have horizontal support. So like I said at the start of the video, we're kind of between a rock and a hard place. For the bulls to reclaim control here, on the smaller time frame, we do need to break Bitcoin's price back above this uptrending diagonal trend line, which is sitting around 30,300. If the price is able to push back above this level, we could actually see a continuation into this range once more. However, until that happens, we do have a slight bearish bias toward the downside, meaning we do expect this level to be tested again, and if lost, we can then expect a continuation lower. So let's talk about that. If we do lose 29.8K, where could Bitcoin go? And then we're going to talk about, how Bitcoin can reclaim strength and how the bulls can take control. So if we're looking at our horizontal ranges, our next major area of support is going to be this level over here, sitting between 28,450 to 28,350. An incredibly important level, not only on the smaller time frame, but of course an incredibly important level on the higher time frame as well. The reason why this is such an important level on the higher time frame is because if we go to the VRPV, if we go to the weekly chart, and bring up the Gaussian channel, we can see that we do have this upper band of the Gaussian channel. The upper band of the Gaussian channel is actually sitting at around about 28,350 to 28,450. So in fact, the upper band of the Gaussian channel is almost pushing through this level just like that. So it is a significant weekly level of demand. It is a significant weekly level of support, and more importantly, it is an incredibly important level on the weekly chart to be defended if the bulls want to keep the weekly strength in check. If that level is lost on the weekly chart, we are going to see a shift from strong weekly strength to weakening weekly strength, and that could push the price lower. So if the bulls do want to keep control on the higher time frame, they do need to defend 28.4. They do need to defend that weekly Gaussian channel, okay? I'll show you later on when we get into the higher time frame why that is more significant, but for the basis of right now, if we do crash lower, if we do lose 29.8, I would expect this level to be the last line of defense and the most important level to hold. We might not even see it, but if we do, that is a level I'd be definitely looking to get some longs in again and get some price action going for a potential reversal and bounce. Let's talk about the bulls, guys, because we talked a little about the bears. We told you what we're thinking on a smaller time frame. We told you if we do lose this 29.8K level, we do expect that continuation downwards. We told you we have our uptrending support line here. We told you the bears are slightly in control while the price remains under. But let's talk about the bulls. Can the bulls actually take this move downwards and flip it on its head and push it back upwards? They can. They absolutely can do that. And the reason I'm saying that is two reasons. I'll give you two reasons. Number one, a horizontal channel is a neutral pattern. So first and foremost, even though we have a slight bearish bias on the smaller time frame, if we're looking at this structure from a higher time frame, this is actually a neutral pattern, meaning the probability of a break upwards and downward are more or less equal. Now, if we're taking a look at the prior price action moving into this range, we can see we have a uptrend moving into a horizontal channel, which means the probability is slightly in favor of that trend continuing. The reason why we're struggling so much to move upwards from here, like we saw here, here, and here, is due to how significant the 32 to 31.3k level of resistance is. If this level wasn't such a significant resistance, we would have likely continued upwards. We'll come back and discuss that later in the video. So we do have a horizontal channel. If we take the measured move of a horizontal channel and apply it to the perceived breakout point, we can see if continued, the directional move will actually take us over 32,000. So there is structural I would say justification to assume a move toward the upside. How can you utilize that in your positioning? Well, you can say there is a slight bias on the higher time frame for a continuation upwards to 32k, and therefore if I wanted to and I could afford the risk tolerance, I could place a very tight stop loss for a trade like that. Now, if you wanted more confirmation of that move, you should be waiting for some indicators to suggest that the metrics of price action are in favor of that move. Most importantly, I would be looking for volume and looking for momentum. If we were looking at our technical indicators, as of right now on the 4-hour chart, they would not be suggesting this is a likely scenario. And that again, if I do have to bring that trend line up, like I said, will not look like a likely scenario while we remain underneath that trend line. The likely scenario is still down, but while we are above the support level, it is still probable, okay? It is still possible, it can still happen, but it is unlikely. The chances of that happening after we lose 29.8 diminish completely almost, okay? So you have to understand. Trading is a game of probabilities, guys. It's a game of probabilities. While we are at support, support is support until it's not, and therefore reversals can occur. We have to be aware of that. We're not closing that door. We are saying though, while we're underneath these resistance levels, the probabilities of continuation go up. And if we do lose 29.8, the probabilities that we do get this reversal diminish almost entirely. Okay, so we can use that to our advantage. When we're looking at our technical indicators here, we're looking at number one, momentum. Again, by this RSI, we can see if we do get that break over the RSI, that would be a very good sign. That could signify that the price has again regained some volatility, some velocity, some speed, and some momentum, bullish, and that could push the price up and potentially take the price upwards. But again, before we get that crossover, we do need to see the price make some solid headway upwards. So it's unlikely we're going to see that crossover if we do not even get above this trend line. Number two is going to be volume. Now, this is not a very good thing, as we are seeing two things. Volume was higher at this point in comparison to this point. We can see at this level of price action over here, we had a higher volume delta in comparison to these points over here. We said this in yesterday's video. One of the reasons why we actually expected this continuation downwards to this range of 30,000 yesterday was because of two things. We saw momentum was falling and we saw volume was falling. The metrics of price action were suggesting weakness, and we have now seen that weakness develop. We saw a liquidity grab up to the top side first. We have now seen that weakness develop to our next base of liquidity, which is going to be 29.8 to 30,000. So I think I've wrapped up the short term there, guys. Let's go ahead and talk about the higher time frame on the daily, and then we'll go ahead and discuss the weekly chart. So let's get rid of some of these lines just so we can make it a little bit more clear of what is going on. We'll discuss what those mean in just a moment. We'll drag this one across. As we can see, we are currently retesting $30,000 on the daily chart. We do have to close this candle above 30,000. It's going to be a very deciding candle. This current daily candle is most likely going to be the deciding candle in regards to whether we drop below 29.8 and then continue downward, or close above and possibly have a chance to push back upwards. If we do close a daily candle under 30,000, it will be the first daily candle we have closed from the top side down from 30,000 since all the way back on the 16th of April. You can see on the 16th of April, we closed the candle above 30,000. We ended up into this downtrend. We could potentially see that same thing occur. If we close that candle below 30,000, we could see a continuation downwards. Furthermore, we can see this low over here at 29.8. If we do close it below 29.8, that will push the price lower. It would mean we have deviated above and broken below this neckline of support according to this horizontal structure. That would validate the breakdown of that horizontal consolidation we have had within this range. So I'll be also watching out for that. But what I wanted to talk about was 32,000 to 31.3K. As you can see, 31.3 to 32,000 is a major area of resistance. We had a long time standing resistance here, and we've been retesting it now for a couple of weeks. We can also see on the VRPV, when we break above 32, you can see all the way up into about 38, the volume completely dissipates. Our historical volume dissipates, signifying an area of low historical resistance, or a low resistance range, or a low volume range, however you want to call it. It is a low volume range. What does that mean? It means there is historically lower amounts of orders in that range, and therefore the volume requirements to push the price upwards through this range decrease, just as the volume requirements to push the price downwards from this range to that next range decrease. So we saw massive volatility in that range. We're also going to see massive volatility within this range again if we break above 32,000. So as we approach these massive areas of importance, this instance being 32,000, we are expected to see sideways consolidation, compression, a lot of liquidity grabs, a lot of indecisions in the chart. And again, like I always say, everything is based on risk return. While we are at macro resistance, expect the price to reject. So while we are here, I do expect the price to come down. The lowest I think we should go is 28.4. I think that is probable. If you've been playing off that rule book, if you've been playing off resistance is resistance until it's not, you have been shorting these levels over here. You have been looking to take profits in this lower chunk of support. Your next shorts are taken underneath this level. Altcoins are a different story. Some altcoins are breaking upwards. Some altcoins are getting wrecked. So you can kind of trade those however they're going. But again, when we get these directional moves for Bitcoin, and I don't mean this is a directional move. This is not a directional move. A directional move is a break out of a current structure or over a higher time frame liquidity level. A directional move would be this move here. That would be a directional move. A directional move would be a move above 32,000. These are all directional moves. And when we get these directional moves, altcoins will then be in sync with Bitcoin. And again, we won't see these discrepancies between pairs. We'll most likely see everything kind of head in the same direction. And that is when you want to align your portfolio without any hedges. So right now, you should be having hedges, which you should be playing both sides. Again, you shouldn't take a trade and automatically take a short. You have to be at profits in some of your positions and then take shorts on different time frames, or vice versa, to correctly hedge. If you're just going to take one long, one short, same entries, same targets on the other side, you basically just come out net, all right? You come out net zero. So you have to hedge correctly when you are doing so. But I'm going to leave the video there, guys. I think that is enough for today. I think in the next video we'll come back and talk about the 4-year cycle. We'll discuss what's going on. We'll also discuss the economic news and data, because there's a lot going on behind the scenes in the economy I want to talk about in regards to potential damaging and long-lasting effects that could actually push the prices down. And I want to say we're not out of the blue yet, guys. Once again, we've closed that monthly candle above 30, but if we do not close this second monthly candle and validate that breakout, we could actually come tumbling down. So that is obviously a risk, and there's a few things popping up in the economy that could make that risk a reality. Thanks for watching, guys. Go ahead and check out the Crypto Academy courses at gmail.com. It is a link down below. A 10-year course we teach you how to trade everything you know, and we'll catch you guys in the next one. Cheers.